All right. Hello, everyone. Welcome. I'm just going to wait 2 more minutes to allow some more people to join us, and then we'll get started. All right, we will get started right now. We will have a live Q&A at the end of this live session. We will start off with the Chapter 1, Profiling the Market. For those of you who are not new to CRT and are not new to Turtle Soup, this may sound repetitive. However, repetition creates masters. For those of you who are new and would consider yourselves beginners, this is amazing for you and is an introduction to CRT. So we will touch base on CRT and the basics of CRT at the end of Chapter 1. However, in the start, we will be learning how the market functions. Those who are new to CRT must strip themselves of any of their previous knowledge. Romeo states this at the beginning of his mentorships. There's a reason why. Because everything else is garbage. So whatever you have learned in the past, scratch it out of your mind. Unless it is from Romeo or ICT's core content. If you want to make the most out of this and every single chapter being released, then you should dial in and start taking notes every time you attend a live stream. And if you're watching the recordings, take the notes as well. There's going to be 11 chapters. This is Chapter 1. Every single week, we will have a new chapter. Each chapter will lead you closer and closer to eventually profitability, but first, creating your own model. I will keep on releasing a few of my models on my YouTube, my Telegram, and some privately only to you guys. However, the goal is to create your own model and form absolute independence. Let's get started. Profiling the market, Chapter 1. Market profiles. There's 2 types of markets. There's only 2 ways a market can move. A trend or range. A trend is the expansion or distribution leg or impulse leg. There are many different ways to describe a trend, the way people call trends. The expansion, large move. A range is the consolidation or also known as the accumulation phase. A market will consolidate, expand, consolidate, expand. Manipulation is within the consolidation range. And manipulation happens right before the expansion move. A bullish trend. What is a bullish trend and what is a bearish trend? When we are bullish, price is breaking highs and rejecting lows. When we are bearish, price is breaking lows. Lows are being broken through and highs are being rejected. We're going to see examples of this as well. The first breakout of a range is usually fake. This is the turtle soup, also known as the manipulation. So when people talk about the Judah swing, when ICT mentions the Judah swing at 9:30, price opens, manipulates above a high, and then drops, that manipulation is a turtle soup and is also the fake breakout. When bearish, we wait for the low that rejected a high to be broken through. That break in structure is the true market structure shift. That is what you need to be looking for. The market shows an intention of bearishness by rejecting the high, and they show an intention of continued bearishness by smacking through the low. Right? If we do not turtle soup a low, it means that the market makers have no intention of defending that low. It means price will continue dropping lower. For the more advanced students, this might sound obvious. For the beginners, this is very important to drill into your brain. This will help you stop chasing price. What does that mean? If price breaks through a low and you are going long, at least attempting to, and you try to enter long once more after price broke the low that rejected a high, you are chasing price. You will continue losing. Why? Because price is showing an intention of continued bearishness by smacking through that specific low. Let's move on. A market is considered ranging when highs and lows are both being rejected. So in a bullish trend and a bearish trend, lows or highs are being rejected and lows or highs are being broken. In a trend, however, both lows and highs are being rejected. As we can see, low rejected, high rejected, low rejected, high rejected, low rejected, high rejected, right? Eventually we break through this high, however, we reject the break, false break. Then we reject the low, reject the high, reject the low. So this is a range. What does that mean? You can be trading range high to range low. You could be trading the soups. So as soon as we fall back beneath the range and close below it, displacement below, we can locate an order block and then enter short. Short to where the opposing end of the range, 50% and then opposing end. So a range is very, very basic. You need to be able to see this with your eyes on the chart. Do not overcomplicate anything. A trend is expanding and a range is going sideways, rejecting lows and rejecting highs. This is a small depiction of a range, right? We turtle soup the high, turtle soup the low, create equal highs, turtle soup the low, target the equal highs, and break through the high that broke the low. Here is a trend. The reason why there's a turtle soup and SMT and turtle soup is important. So we range, consolidation, expansion, consolidation, expansion, consolidation, expansion. Every single turtle soup, every single SMT is a manipulation event. All right. The turtle soup at specific points are the protractions, are the Judah swings. So we will have ranges within trends. We range, turtle soup a low, reject a low, break through a high. Expansion, consolidation. If this was NQ, the opposite symbol, or sorry, not opposite. The symbol you would use in order to look for SMT is ES. ES and NQ. ES turtle souped a low, NQ failed to turtle soup the low, SMT. This is one of Romeo's entry models. Expansion leg number 2, consolidation, turtle soup a low, reject a low, and break through the high that broke the low, expansion leg once more. This high and this low are important. This high and this low are important. So here's a chart example. We will get into the live charts later in the live stream. So a bullish expansion, highs are being broken. That is drawn out by these dotted lines, dashed lines. And lows being rejected is drawn out by a black straight line with TS, turtle soup. So we reject a low, break through a high, turtle soup, break through high, expansion, consolidation, expansion, consolidation, expansion. Reject a low, break through a high. Which high did we break through? The high that rejected the low. That is important. Look, high that rejects a low was broken. High that rejects a low was broken. Not this high, not any other high over here, this specific high. Turtle soup, high that rejected the low, broken. You could even choose this one. This can be considered a high. I choose to use the most obvious highs. So if you're wondering which one to choose between these two, you can choose the most obvious one. Now, safer players might choose this one as you're trying to catch a turtle soup and take profits. Let's take a deeper dive. When we are bullish, the high that broke a low was broken through. And this is a two chart examples. In the first chart, the low was broken, right? Displacement below a low. This can either be a complete turtle soup, just a wick, or there can even be displacement. We broke a low and then break through a high. When a candlestick closes above the high, we are bullish, preferably displacement. So if instead of this one green candle, we saw a fair value gap formation while breaking through the high, that is displacement. And that is high probability setups form when displacement forms while breaking through ranges. Right after we break through the range, expansion leg number one, protraction, we retrace into an order block or fair value gap or inverse fair value gap. I use the order block, retrace, entry, long. This protraction leg, this movement back down is the OTE. So if you set a fib from the low to the high, which low and which high, the low so when we break the low and reject the low that rejected the other low, click here with your fib. Once we break through the high that broke the low, that is the high that you will anchor the other end of your fib to, and you will locate the 0.62 level and two other levels. I will show that on my chart, and I will also reveal the settings for the beginners. OTE long. Turtle soup entry was below here. As you can see, for the more advanced learners, turtle soup right here, CRT, long up until here. And if you're looking at the higher time frame, you would understand that the target was actually here. And if we expanded through the target and all your targets were already hit, meaning you're outside of the trade, and price retracts and protracts down to the OTE into the order block, you can have a second entry. This is how you trade multiple trades per day, not recommended for beginners. So We would like to see displacement through the high with a period of consolidation followed by retracement into the high right? So into this high, we retraced back into it, consolidation, retracement, and broke through the high once more. This is the OTE, and sometimes a breaker. If not the OTE, the breaker. If not the breaker, the OTE. There will always be one. All right, the OTE and breaker always form. Look for them. The OTE produces the second leg, the second expansion leg. So expansion leg 1, protraction, expansion leg 2. Example here, low broken through, the high that broke through the low has been broken through with displacement, and price continued up. So this is a very straightforward approach. Before getting any further, I want to bring up the rules for trading turtle soup. These are simple and must always be respected. You'll avoid many losses if you respect every single one of these rules. Write them down, keep them on your desk. If you have a whiteboard, write them down on the whiteboard. And make sure to remind yourself of these rules every time you're about to place a trade. Rule number 1, buy low, sell high. Your goal as a turtle soup trader, or even entering on an order block or fair value gap trader, is to enter low. So you want to buy at lows and then sell at highs. You do not want to sell when we are low, and you do not want to sell when we are high. So buy low or sell high, or never sell below a low and never buy above a high. Very important. Understand the different market profiles. Trend and range, we just spoke about them. If you don't understand, when the live stream is over and I send the recording, rewind the time and rewatch that entire part of the live stream. Rule number 3, understand the different entry models. I have already explained some of the entry models as the order block, and I've touched base on the OTE. We will learn different entry models later on, not in chapter 1. Rule number 4, always monitor the higher time frame price action. So this includes your bias. This is where bias comes from. And number 5, of course, always manage your risk. Number 5 should be number 1, the most important. You can be good at all of these. Every single one of these you can be good at. Meaning you'll be respecting every single one of your rules, except if you do not respect your risk and manage your risk properly, you will continue losing for the rest of your life. Or at least until you choose to start managing your risk. That is your R to R. So this is a perfect example of a basic turtle soup. We have a lower time frame liquidity pool below this low. Turtle souping that lower time frame's low, hitting a key level, a higher time frame liquidity pool. So what does that mean? A lower time frame and a higher time frame liquidity pool are both being swept. They are both being souped, breaking through the high that rejected the low. Consolidation, retracement into a breaker, expansion leg number 2. Try to go ahead and find these setups on your charts and note down the times that they are happening the most often and when they are succeeding the most often. talking about bias, utilizing the bias. When wondering if the session will be bearish or bullish, first ask yourself, is price expanding or is it ranging? Is price consolidating or is it expanding? Right? So we learned what a ranging market is, rejecting highs and rejecting lows. And we learned what an expansion is. We are either breaking through highs and rejecting lows, or bearish scenario, breaking through lows and rejecting highs. Use the if-then principle. This principle itself has not been created by me. I don't know if Romeo has created it, or if he's made it up, or if he's taken it from someone. I am not sure. However, this is very important to drill into your brains. These two statements below represent the if-then principle. Write these down. Whatever you see here, write it down in your notebook. If you're typing, write this down. Type this out. If when the higher time frame is bullish, then the lower time frame will smash through highs and get electrocuted by lows. This is another way of saying when the higher time frame is bullish, the lower time frame will break through highs and reject lows. Repetition, right, guys? If when the higher time frame is bearish, then the lower time frame will sink like a rock in the sea. Highs will electrocute price into a bearish downfall. Lows will crumble. Lows will be broken. Highs will be rejected on the lower time frame if the higher time frame is bearish. So if then, do not blindly trade turtle soup. If you are learning all of this info, right, every single chapter, if you take them serious, then you will never be blindly trading turtle soup because you have all of the knowledge. Now, if you choose to binge watch the recordings and not take notes, not backtest, not study, then you are blindly trading turtle soup. All right, that's exactly what's called pattern trading. Higher time frame order flow is what is important. Then the turtle soup. So you don't look for a turtle soup before you know the higher time frame bias. Now, if you're scalping, if you are a scalper, higher time frame doesn't always matter. The bias doesn't necessarily matter if you are scalping a few points. Now, if you're scalping 20, 40, 50, 60, 100 points in the futures, yes, higher time frame is important. If you are scalping 5 points, the higher time frame is not so important. So choose your style and adapt to it. So an example would be right here. If the daily candle closes above yesterday's high, then it is likely that you will be able to buy below the open of tomorrow's candle to go long. A close above a high is bullish. In a bearish scenario, a close below a low is bearish. So you can do this on the higher time frame to understand a little about bias, right? Sometimes you will see price break through a high and then come down. That is because a key level has been hit somewhere above. Now, we broke through a high. Price the next day is bullish. It opens, manipulates lower, and runs up higher. The goal when trading the daily expansion is to buy below the open of this candle. A perfect example, actually, that I brought up right before. This candle broke through this candle's low. We did not wick. We actually closed below the low. Now, why did we reverse up? Likely because of a key level. right? On the lower time frame, we could have potentially seen a CRT at that key level. Now, of course, this is all guessing. However, we will move to the charts and I will show you. There would have been a CRT, turtle soup into a key level reversal, close above the next day, bullish confirmation, manipulate lower, and continue higher. You do not just buy at any random location. So when price opens the next day, you do not buy when we are above the open. Your goal is to buy below the open. When bullish, we wait for a turtle soup or whichever entry model you use to appear below the candle's open. When we are bearish, we wait for that turtle soup or your entry model to appear above a candle's open. Now, this is very basic. This is straight from my slideshows, my lectures on YouTube, a 3-candle CRT. This is touching base on the basics of CRT. First candle creates a high and a low. Second candle manipulates the high. Third candle distributes lower. This is for the beginners. High was turtle souped. Low was targeted in the distribution phase. Your entry is above this candle's high. Now, I will show you guys a model on how to basically enter on the second candle. The 9 a.m. CR in itself is one of those models. However, I will introduce to you a higher time frame model on the 4-hour right now. So as I said, the first candle forms the range. We wait for the close, mark the high and the low. This is a timed range. So what's important to understand is that there are price ranges and timed ranges. Write this down. A price range is simple. A dealing range is a price range. So from a swing high to a swing low. And a timed range is using a 4-hour time frame or daily time frame and drawing out the high and low of that specific candle, of that specific day. So Monday and Wednesday are high probability CRT days, meaning on Monday we can form a CRT range, soup that range on Tuesday or Wednesday, and target the opposing end of the range for the end of the week. Now, price isn't restricted to that sequence. However, that is the general idea, right? Price can easily manipulate on Tuesday and hit the opposing end of Monday's range on Wednesday. That does not need to happen on Thursday or Friday. Now, Monday and Wednesday for futures are very high probability days for the daily CRTs to play out. For Forex, we use Mondays and Fridays. For futures, we use Mondays and Wednesdays. A second candle will open, turtle soup a high or a low. In this case, we are turtle souping a high. And this is where the most advanced entries come from. Then price will close into the range. The third candle will present the quickest and easiest entries with very high probability. So price opens, manipulates higher. We are already bearish because we closed back inside of the range, turtle souping the first candle's high. So we are bearish. We want to enter above the third candle's open at our entry point, whether that be an order block, an OTE, or a breaker. So, CRT confirmations. Before ever entering a CRT, before even considering entering this setup. It is not as simple as drawing a high and low, waiting for a candle to close, and then entering. That is pattern trading. You need to have what I like to call confirmations. And what are these confirmations? Well, number one, a timed range. This needs to be, if we're trading NASDAQ, either Monday or Wednesday. Now, if the CRT range performs on a Tuesday or a Thursday, of course it might work. However, it is lower probability. So you choose. Do you want to enter on lower probability setups, or do you only want to take high probability setups? The smart answer is to only execute on higher probability setups. So for futures, you wait for Monday or Wednesday. For Forex, Monday or Friday. That is one confirmation. Another confirmation is a timed turtle soup. So this turtle soup needs to happen between a specific time on Tuesday or Wednesday for it to be considered another confirmation. For example, on the next model that I will introduce to you, I don't want to reveal it right now. It is in this presentation. I'll talk on it in a bit. But in the next model, there is a specific time that the turtle soup must occur on the lower time frame, a specific range of time, in order for it to be confirmed. So these are 2 points of confirmation, 2 points of confluence. Third point, higher time frame key level. So if we have Monday's range, Tuesday turtle souping, the CRT high, and a key level being hit, maybe a daily fair value gap, a weekly fair value gap for that matter, right? Key levels come from the higher time frame. This is a daily chart, key level from the weekly key level hit, retrace lower. That would be a higher time frame key level. Now, before I move any further, all you need to confirm a proper CRT entry, a high probability CRT entry, are 3 confirmations. You can have all 5. You can have 4. You can have 3. You cannot enter when you see 2 confirmations, and you cannot enter off of 1 confirmation. There must be minimum 3. All right, apply that filter to your trading. Do not execute any trades without it. Write that down. CRT plus inside bars is another confirmation you can use. So if a CRT forms and we have a second candle that forms inside the range, or even more candles, that is another confirmation that the CRT is high probability. And the last point of confirmation is a lower time frame CRT within the higher time frame CRT. We will touch base on this in a few slides, if not the next one. So this confirmations slide is directly from the CRT lecture. However, maybe when I'm explaining it right now, it is clicking for you a little more. You need 3 of these in order to execute a trade. Here is the model I'm going to introduce. So we are at the end of chapter 1. Chapter 1 is over. This is an extra for this week, as I promised a 4-hour model for all of you guys. As you guys have probably seen, I released it on my Twitter and my public free Telegram. However, I'm not going to be releasing a YouTube lecture anytime soon on this model. This is for you guys. Let me get a sip of water. All right. A Forex specific model. I know a lot of my students are Forex traders. So the 5 a.m. model, we're going to use a 4-hour time frame to locate our CRT, specifically the 5 a.m. time frame. Sorry, the 5 a.m. hour on the 4-hour time frame. That is our CRT range. So it is a timed CRT range, number 1. We will wait for a 15-minute CRT to form at the highs or lows of the 5 a.m. CRT. So we want a lower time frame CRT within the higher time frame CRT. Lower time frame CRT being 15 minutes and the higher time frame CRT being the 4-hour. Confirmation number 2, lower time frame CRT within the higher time frame CRT. And here comes confirmation number 3. The purge, the turtle soup, occurs during the 9 a.m. hour up until the 10:30 a.m. mark. So you can only expect, the purge is only accepted if it occurs between 9 a.m. and 10:30 a.m. New York Eastern Time, UTC -4. So this is credential number 3, timed turtle soup. Timed turtle soup, 9 a.m. to 10:30. How do we enter? Enter when the second candle of the 15-minute CRT closes. So once that second candle of that 15-minute CRT closes between 9 and 10:30, you can enter either short or long, depending if you are bullish or bearish. Now, if you do not want to enter when the second candle closes, you can enter off of a 15-minute or 5-minute order block. The order block entry will not always be there. Sometimes it will be a fair value gap. Sometimes it will be strictly a breaker, as there will be a breakaway gap left open. That is why I choose to execute when the 15-minute CRT second candlestick closes, as there will always be an entry. Let's actually head to a chart and look at Euro USD. So I just want to make sure that everybody sees my chart. Yes, you do. Okay. So we're going to look for that 5 a.m. model on Euro USD. I'm not sure if we're going to backtest this. Maybe we will. 4-hour time frame. Let's take a look at this week, actually. So 5 a.m. 5 a.m., 9 a.m. Let's random example here. Let's rewind the time, make it easier. So we are on the 4-hour time frame, looking at the Euro USD, the Euro dollar, 5 a.m. So that is confirmation number 1. Right? Timed. Let me actually, before I do that, let me just type it. Timed CRT. Now, what is confirmation number 2? Lower time frame CRT within the higher time frame CRT. let's just fix up the range. 15-minute CRT at the lows of the 4-hour CRT. Let's try to find one. Just by looking at this area on your chart, what do you see? Well, I see a CRT right here. Let's put these lines a bit thicker. This is the 15-minute time frame, lower time frame CRT within the higher time frame CRT. Higher time frame CRT represented by these blue lines. And the lower time frame CRT represented by these black lines. 15-minute, 4-hour. Confirmation number 2. Lower time frame CRT within the higher time frame CRT. And we need one more confirmation to allow us to execute the trade. What is that? What is that we're looking for? Turtle soup needs to occur at 9 a.m. up until 10:30 a.m. Turtle soup at 10:45. So this is a perfect example, actually, live. I did not test this out beforehand. As you can see, price did not turtle soup at 10:30. Price turtle souped at 10:45. Does that mean this is not a possible entry? No, it does not. All this means is that your probabilities of the setup working to its best potential drop immensely. So you can still enter. For your risk to reward purposes, drop your size. The chances of you winning this trade are lower probability CRT setup. Why? Because the third confirmation that we are looking for is a timed purge. And the timed purge for the 5 a.m. model is between 9 a.m. and 10:30 a.m. The purge over here happened at 10:45. All right. On a 15-minute time frame, we can see the lower time frame CRT right here. Candlestick close. You can enter once the candlestick closes and target the opposing end. Ultimately, your final target can potentially be at the opposing end of this 4-hour CRT. If you're scalping, you would put it somewhere else. Now, the full move is actually to have your partials at the lower time frame CRT high, and then the next partial at the equilibrium between the 4-hour CRT low and high, which would be right over here. Partial number 2 and full TP. So first partial, second partial, full TP. So there was no third confirmation. Let's try to see if we find any other confirmations, right? We have CRT inside bar available for us to look for. We have the higher time frame key level available for us to look for. So our CRT came from a 4-hour. What does that mean? Our key level must come from a daily chart. What do we have on a daily time frame? Any key levels here, guys? The only key level available, if you choose to use them, are the daily highs and lows, not any random high or low. So this I have not mentioned on my YouTube. You guys should write this down. Daily highs, daily lows, weekly highs, and weekly lows are key levels. Do not ignore them. There's a reason why price rejected this low. All right, so the daily low is the key level. Third confirmation, key level, entry long. All right, now let's take a look at another example. Hopefully we find an example where the 5 a.m. CRT model actually formed to perfection. Let's just erase all of this. And try to find another setup. So 5 a.m. and 5 a.m. Let's use the same lines. So I can already tell just by looking at this, this would be a more advanced entry. So for the beginners, maybe you might not want to execute this. However, feel free to backtest. You must backtest everything. For the advanced traders, pay attention, listen up. Second candle soups the high and hits the low. Now, some people will say this is not a CRT. This is absolutely a CRT. The low was hit in the second candle, and the high was souped in the second candle as well. Let's rewind the time. Let's just advance this here. So confirmation number one, what is it? Well, we have the higher time frame, timed CRT range, right? Timed CRT range. Confirmation number one timed CRT. Confirmation number two, 15-minute lower time frame CRT within the higher time frame CRT. Let me just draw this out a little better. 4 hour. Go 4 hour. 15-minute time frame. Do you see a CRT? There's two potential ways you can draw the CRT. One way being right here, and the other CRT on the 15-minute time frame would be right here. Just so happens to be that the 15-minute CRT high aligns with the 4-hour CRT high. So there was a higher chance that this CRT high would have been respected. As soon as the candle closes back into the range, your entry occurs. So you would have entered price up here. Stop loss and take profit. Now, if you enter at a order block, this candle, 5 minutes, look for a thick up close candle. And I would not consider any of these order blocks. Now you could wait for a breaker. What is a breaker? This candle right here. As soon as price closes below it, we retrace into the breaker and trace back lower. Back to a 15-minute time frame, we have the lower time frame CRT. That is confirmation number 2. Lower time frame CRT within higher time frame CRT. Let's mark that down. confirmation 2, lower time frame CRT within higher time frame CRT. Confirmations, let's make this bigger and put this here. So we have first confirmation higher time, first confirmation timed CRT 5 a.m., specifically 5 a.m., high probability CRT time, and the second confirmation lower time frame CRT within higher time frame CRT. The third confirmation that we didn't find in the other setup, that is a part of the 5 a.m. model. The purge turtle soup must occur during the 9 a.m. hour up until 10:30. Let's see when it happens on the 15-minute time frame. At exactly 9:30, market open. New York stock market opens, Judah swing, manipulation up, and continuation lower. This is a perfect setup. Between 9 a.m. and 10:30, we have the turtle soup, a timed turtle soup. So, confirmation number 3. Let me just confirmation number 3, a timed purge or turtle soup. All right, so there is 3 confirmations here. Now, can you find any other confirmations? Yes, of course you could. What is an example? Within the lower time frame CRT, we formed inside bars. What do you see? CRT plus inside bar. CRT, inside bar. Is there a higher time frame key level for the higher time frame CRT? 4-hour CRT high. Let's look at a daily time frame. We have a fair value gap right here. Let's draw that one out. So we hit the key level. The key level is within the CRT. That is still acceptable, guys. So a lot of you beginner students will be confused when you see a key level being broken through, I guess you can say, on a lower time frame. However, if you go back to a higher time frame, you can clearly see we respected the key level, right? On the 4-hour, we respected the key level, closed inside of the key level, and had a turtle soup, right? On the lower time frame, it looks like we broke through it. Everybody is becoming bullish. Fake market structure shift, breaking through a key level. Well, at least that's what they think. Instead, we formed the lower time frame CRT within the higher time frame CRT while hitting a key level and started to expand lower. So in this one setup alone, we had 4 or 5 confirmations. Why do I say 4 or 5? Because the inside bar only occurred on the lower time frame. So that's going to be it. I'm going to touch base more on this 5 a.m. model later on, not today. That's going to be it for the Chapter 1 presentation. Now let's get onto the questions, Q&A time. I'm not going to read through any of the questions texted in the Telegram. I'm actually going to allow you guys all to speak one by one, ask a few questions. All right, let me allow everybody to speak. Please do not ask any questions until I say. We have a few more students that joined later, I can see. For those of you who joined later, go ahead and watch the recording, especially for the beginners. Chapter 1 is very important. I did not, before we get into the Q&A, I want to make something clear. Chapter 1 did not dive into CRT itself. It dove into the mechanics behind CRT. Within CRT, we have everything that I taught in Chapter 1. That's why it's very important to learn. All right, let's move on to the questions. Please, one person at a time.
Can I speak?
Yes, go ahead.
Okay. Thank you for what you're teaching us. That's one thing. And the other thing is, you're teaching us the chart with this euro US dollar. And I got another one. It's forex.com. So I see the same, like it's the 5 a.m. candle. But when I am trading, and it's CME chart, 4 hour, I don't have any 5 a.m. candle. So how can I fix that on the CME chart?
You're talking about futures?
Yeah. No. When I'm on Euro chart, it's 6E1 CME. That's the chart when I can trade on. I don't have any 5 a.m. candles. I only have. So I must be doing something wrong. So I only have 7. It's when I'm on the 4 hour chart. I don't have. I have the 6, the 2, the 10 on the euro. So do I have the wrong chart?
When you click Euro USD over here, yeah, which chart do you click on?
Futures. But it has to be Forex then.
There are currency futures. You might be getting something mixed up. There are currency futures. They do exist.
Okay, but I just want to trade euro, and I'm on Tradeovate with TopStep.
On Tradeovate, you should be trading Euro USD, the currency itself.
Okay.
So you would be using forex.com or FXCM or Wanda. Whichever one of these you just choose. I like to go FXCM.
Because now I always have 2 charts.
Well, are you executing on this chart, FXCM, or are you executing on the futures chart itself?
The futures. So I'm on. It's not the good one for me.
Yeah, that's correct. So you should be trading.
The futures market is. The futures market has got a different time frame. So you're not actually trading the euro dollar. You're trading the euro futures. So it's different. Okay. You'd have to check. If you're going through Tradeovate or TopStep, it's a futures broker. So you wouldn't be able to trade the euro dollar through the futures. You'd have to trade that through a different broker, in my opinion.
Oh, okay.
Yeah, that's absolutely right. I just pointed that out. This is what I am looking at is Forex, and what you said when I asked you what do you look at, you told me the futures, the currency futures. They're 2 different things.
Okay, so I have to change brokers then.
If you want to trade Forex, yes.
Okay. No problem. Oh, thanks.
No problem. Now, before we move forward, I want to mention something. The 2, 6, 10 times on futures pairs, futures, currencies, or futures indices are important as well. So,
Okay, thank you.
and also when looking at commodities such as gold or silver, and even oil, you can use 2-6-10 to your advantage as well. So,
Okay. Oh, thank you very much.
no problem.
Next question for the next one.
Next question, guys. Feel free to come up. If you guys have sent questions in the Q&A chat and would like to just ask them now, feel more than welcome.
Can I ask a question?
Yep.
I am finding difficult in if we are trading 4-hour chart, so we have to find our daily and drawn equity, or just we can trade like this.
Are you asking if you're trading a 5 a.m. chart, the 5 a.m. model,
Yes.
you need the daily chart to help you out for the higher time frame?
Yes, like daily, weekly, or monthly to draw top-down analysis, which direction we have to take trade and draw on liquidity. Like
Yes. So, like I mentioned before, the higher time frame is important. When you're looking at the 4-hour time frame, one of your confirmations that I said is going to be the higher time frame key level. That means the higher time frame is important. Now, is the higher time frame the only thing to be looking at? No. Is it important? Yes. So, for example, Tuesday wicked below Monday's range. Price is currently expanding on a daily time frame and retracing, retracting lower. After what? After breaking through a high. Right? So we rejected a low, we broke through a high, and now we are retracing lower. Price expands, retraces, expands. We have a model formation here. Monday was rejected. The low was rejected on Monday. CRT, for those of you who know, Monday range model. CRT low, CRT high. Tuesday soup. We're bullish on Wednesday. And since we're bullish, price will likely tap into this key level. Now, at this key level, we can reverse lower. If you go on a weekly time frame, you might see that CRT that I pointed out. On my Telegram, in the group itself, we have a CRT high and a CRT low. So recognize how we're on the weekly time frame and our setup came from the 4-hour. High and low CRT. Everything I draw on the lower time frame can be drawn on the higher time frame. This is very important to understand because when people ask about, and this is not to insult anyone, but when you guys ask about higher time frame, how to find bias, you guys are overcomplicating it because everything you learn on the lower time frame is used on the higher time frame. Everything. There's not one thing that changes. Why? Because time is fractal. And beginners, even amateurs, people who've done this for, I don't know, let's say only 2 years, someone who's only been trading for 2 years, they still fall victim to trying new things on the higher time frame because they are unsure. Whatever you do on a lower time frame can be done on the higher time frame. So weekly CRT, we are bearish. If we don't see this candle right here, we are bearish, right? We want to see price hit these lows. On a 4-hour time frame, let's just advance time to where we saw that CRT so I can explain it properly. Price has yet to hit the lows. We hit it right here, but we want to break through the low, at least see a close below the low. That is the weekly target. Weekly is bearish. Daily, so we want daily right here. Daily is bullish. So if the daily is bullish, but the weekly is bearish, and we see a daily fair value gap on the 4-hour time frame when looking for our entry model, the 5 a.m. entry model, we notice the daily fair value gap as a potential key level. And guys, what I'm explaining right now is nobody explains this. Romeo will never explain something as in depth as this, or actually Sham has done very well and he's been revealing a lot of info. But Romeo likes to keep things hidden, and good for him. He's really showed people this and allowed me to see this, but I'm giving it to you right now. From the weekly time frame, we are bearish. On the daily time frame, we are bullish. You guys might be confused if that happens, but we have a daily key level on the 4-hour time frame. We have a 4-hour CRT while hitting the daily key level. We were bullish at the open of the day. Where will we be bullish up into? The key level. Once we hit the key level and we see a reaction like so, timed CRT, timed purge, we are now bearish and want the opposing end of the weekly CRT range to be hit. This movement was not random. We went up because the daily was bullish. But the daily key level where the 4-hour CRT is was important because that allowed us to hit our weekly CRT. So that in itself explains how higher time frame bias can be used. It may sound confusing. Rewind everything in the recording and listen to that part again. And then ask me questions when in the group chat. So if you guys have questions only after rewatching what I just explained and taking notes, then ask me in the private group chat. Next question, please.
Can I speak?
Yeah.
So I was wondering if we can use that model on the 4-hour CRT during the London session and taking the range from the 10 4-hour candle and enter during the London session with the same principles and the same rules. 15-minute time frame, London session, and then enter off the order block or after we close under it, after the second close. Could we use that as well? So we could have more setups during the month with CRT, both New York session and London session, since Euro USD is very active on London session as well.
The answer to that is yes. So the 5 a.m. model on the 4-hour time frame is not the only model that can be used. This is for New York session, as you've said it. And there is a model to be used during the London session as well. Sham teaches that model as the 3 a.m. model. I will dive into it as well. I want to give credit to Sham as he has taught this on his YouTube for free. So I'm going to teach the 3 a.m. model, as he calls it, later on. That is for London session.
All right, thank you.
No problem. Any other questions?
I wonder if you could, it's not really a question, but I just wondered whether or not you could possibly show where you think the 15-minute, the 15-minute CRT was on yesterday's NASDAQ 9 a.m. model on the Friday.
15-minute CRT for the 9 a.m. CR model? Are you referring to that?
Yeah.
Okay.
Yeah. Thank you.
No problem. From what I saw, actually, from what I remember, we had equal highs on the lower time frame, and there was no CRT. However, for those of you paying attention, MNQ actually broke through the highs. So let me show you something. If I'm correct here, and that is correct.
Frequently asked question regarding CRT or about CRT is
okay. So 1 hour, we have the 8 a.m. high, 8 a.m. low, correct? We do not use any of these candles because all of the ranges have been broken. 15-minute time frame. I mean, this entire 8 a.m. 1 hour CRT can be used on the 15-minute as well. So the 15-minute and 1 hour range are the exact same. Nothing more than that. Now, was there an entry? 1 minute? No, there wasn't. We created equal highs. Now on MNQ, if you guys trade MNQ, you would have had an entry, potentially 15-minute CRT swept, as well as the 8 a.m. Let's rewind the time here as well, make it easier. 1 minute order block formed with a close below, entry short, and that would be a 3.38 R to R if you choose to put your stop loss at the close of the order block. You would have a 4.19 R to R. That is MNQ.
On that particular trade, though, there was no double tap there, was there at all? There was no double highs broken. That was just the single high broken.
Are you referring to a 15-minute high and a 1 hour high being broken?
Yeah. Yes. That didn't occur on that one, but
you're talking about NQ or MNQ?
On the MNQ, I think really what I'm saying there was normally you look preferably for a 15 and the 1 hour CRT highs to get all those to be broken. Yeah.
But this in itself, the 15-minute CRT is the same high and low of the 1 hour CRT. Yeah. So
a single break would do it then in that respect.
Exactly. If they're overlapping.
Okay, brilliant. Okay, that's great. Thanks.
No problem. Now, let's take a look at ES. Why do I want to look at ES? Because for those of you who don't trade MNQ and want to find a way to enter this, because in fact there is an order block on the 1 minute time frame. We close below entry off this order block. How do you catch that entry? Well, if ES gave us an SMT, that would have been basically a valid entry. Let's just remove the drawings here. 1 hour. $8 a.m. high and low. $15-minute high and low, same thing on ES. And we want to advance time to 9:41. ES was not even close to its high here. So going to a 1 minute time frame, you can see ES did not even close above the 1 minute fair value gap, whereas NQ did. We turtle souped the high and we were heading lower, and Q closed above the high, continued heading higher. I would not execute this trade. Now, you could say these equal highs with ES closing and turtle souping these lows is an SMT. I do not execute trades like this. And regardless, Friday was NFP. You should have not been trading unless you see an A plus setup. Was this an A plus setup with the order block being created? No. Now, if you trade MNQ, sure, that was an A plus setup with the order block formation right here, close below, entry at order block, immediate rejection. That was A plus. NQ, no. ES, no.
Sorry, this might be a stupid question. What's the difference between the two?
So MNQ is the, as you can see right here, micro E-mini NASDAQ 100, and the NQ is the NASDAQ E-mini. So the micros are smaller contract sizes. They allow people with smaller account sizes to trade. And if you only trade, let's say you're someone who's been trading with one NQCon, and you're probably going through a dilemma now. How do I take partials if I'm only in one contract? Well, you trade MNQ, and 10 MNQs are the equivalent to one NQ. So you're able to take partials throughout your trade. They are the exact same. Now, there will be slight discrepancies in the charts. As you can see right here, MNQ, we tapped above the high a few ticks, and NQ failed, created equal highs. But everything else really is the same. Everything is the exact same. It's an exact replica, except for small, slight discrepancies like so. Basically due to a different contract, right? Different orders being submitted.
So could we use it as a confluence like we do for ES?
No, not necessarily, no.
All right, okay, thank you.
No problem. Now you can, I mean, there's not really a point, but you can have both MNQ and NQ open on your chart. And if you see something like this form, then you would execute on MNQ and say, okay, I'm not going to execute NQ today. I'll execute on MNQ. So if you trade 2 contracts on NQ, you would execute 20 contracts on MNQ just for the same dollar value per tick. And that's it. So we've been going for about an hour and 20 minutes. I'll answer one last question.
I do have a question though.
Yep, go for it.
So if we're using the 4-hour 5 a.m. candle, and we'll use the range of 9 to 10:30, but sometimes we do have 10 a.m. use, and that would be the manipulation. So how can we shift those 15 minutes range, or how it works?
So are we talking about the 9 a.m. CR model?
Yes. So apparently we'll use the 10 a.m. candle instead of the 9 a.m. candle, because 10 a.m. will be in use or something.
Yeah, I want to pull out an example, if we can get one here. Well, we don't. Here we have 9 a.m. souping 8 a.m. highs. All right, whatever. We'll just use this. Let's say 9 a.m. did not soup 8 a.m. highs, scratch that out, and 10 a.m.'s candle did something like this, right? And we souped 9 a.m.'s highs. The only thing you would do is take your high and low of the CRT, very, very simple, very straightforward, and use the 9 a.m. candle for that CRT range. So when you hop down to a 15-minute, you would look for a 15-minute CRT at the high or low. Right? At this point, we're looking at the high 15-minute CRT at the high of the 1 hour range. There is a CRT right here. It aligns with the lower portion. Let's say 5 minutes. You would see we wick above with this wick. This wick is unimaginary right here. Let's say this did not wick above, but only 10 a.m. did. We wick above the high, come lower. Look for the order block right here, for example. Let's say there was an order block here. Entry with the retrace up, targeting the opposing end. On the 15-minute chart, of course, this is a close above. It still is a CRT, just lower probability, so I would have not executed this. I'm just trying to make this example flow better as a random point on my chart. Is that a good explanation, or am I missing a part of your question?
Yeah, you got it. Thank you.
No problem. So that's going to be the end of today's session. An hour and 21 minutes. I think I did about 55 minutes or an hour of the chapter 1 presentation. The rest of it was the Q&A. We'll catch up very soon. There's going to be the breakdown tomorrow. It may be live, depending on how things go tomorrow, or it will be recorded. Besides that, a schedule will be coming out for next week. As I mentioned in the live trading sessions in the previous week, I will be trading London session a few times. So maybe once, maybe twice. I'm not sure yet. I will see how the open goes on Sunday, tomorrow. All right, guys, have a nice one. Keep on studying. And the recording of this live stream will be out in about 15 to 20 minutes, depending on how long this takes to upload. Maybe even 30 minutes, not sure. All right, have a nice day, guys.
Good evening.
Good evening.
All right.